Welcome back to Explain the Charts. Today we're looking at USDJPY, and we're doing it all, the news and the charts. First, let's recap some recent events based on the latest news headlines. Easing U.S.-China trade tensions, hinted at by Treasury Secretary Bessent, has boosted risk appetite, but analysts remain cautious due to slowing business momentum. Specifically, the composite PMI for April slipped, and the Fed's Beige Book echoed concerns about slowing wage growth amidst persistent inflation. Experts predict the U.S. dollar could decline against some currencies, but not against the yen due to its safe haven status, and easing Sino-American tensions could weaken the yen. U.S. dollar to Japanese yen could trend up in the latter half of the year in response to more hawkish Fed policy and disillusionment with the BOJ's lack of rate hikes. Politics will likely be more dominant in 2025, influencing the yen through safe haven demand and potential trade diversion. Now, let's switch over to the daily chart and see how these events correlate with the price action of USDJPY. Looking at the recent price action, we can see a significant drop in late April and early May of 2024. The price rebounded slightly before experiencing another larger correction around June. Let's examine the candles between December 2024 and February 2025. Focusing on December and January, we observe a period of consolidation followed by an upward trend. We have multiple doji candles appearing, signifying indecision. The high volume could suggest a battle between bulls and bears. Let's zoom out to a wider view and also switch over to the 1-hour chart to get a better idea of the short-term action. We see a possible support level around 140.60 and a possible resistance level around 143.22. These are levels to look for when deciding entry and exit prices. A break below 140.60 could signal further downside, perhaps driven by increased risk aversion or dovish comments from the Fed. Conversely, a sustained break above 143.22 could trigger a rally, potentially fueled by positive economic data from the U.S. or hawkish signals from the Fed. The market remains sensitive to trade war developments, so any surprise announcements could lead to significant volatility. To get a micro view, we can switch over to the 15-minute chart. Here, it's a tight trading range, and we see that a number of the candles have very small bodies, signifying that USDJPY at these times are struggling to make any significant move in either direction. To recap, watch for the support around 140.60. If broken, we could see a move towards 139.60 or even lower, especially if risk-off sentiment increases. On the upside, a break above 143.22 with sustained positive momentum might lead to testing 145.00, contingent on favorable economic data. Ultimately, USDJPY's movements hinge on a complex interplay of economic data, central bank policies, and geopolitical events.